The Florida housing market is doomed. And I know you can't compare apples to oranges. So I guess you can't compare apples to houses either. And yet, there's this.
Guess how much this is? This is an apple. It's called a sugar beet apple, apparently. And look at it, size of my palm. I thought it was probably just like $2 to $3. I scanned this mother effer. I scanned it. $7. $7. Literally the moment I scanned it, I was like, wait, what? Because the thing is that I had to weigh it, and it was like and I weighed it, and then there was like one of the staff members, I was like, excuse me, is this actually $7? And she like input all her information. She was like, yeah, it's $7. Like, what economy are we living in that it costs $7 to buy an apple? That's crazy. Like $7 for a latte? Okay, this apple, I already think that paying like $5 for an apple is a lot. $7. This shit, bro.
Hello friends, welcome back. You're watching Chris Igoe. If you find value, please subscribe, smash the like, ding the bell, and if we can ever help you with anything, then please reach out through my website, igoehomegroup.com. And if the fact that apples are $7 does not give you pause and does not make you think about inflation, just wait until those apples are $10. And if $400,000 homes trading at $800,000 don't stop and give you pause and make you think about inflation, just wait until they're trading at $1 million. And just to be clear, none of this is healthy, none of this is what I want, and none of it is sustainable, but the market does not care about my opinion or feelings. The real estate market is always right. And right now, 10.8%, almost 11% of FHA loans are currently in default. And to put that into perspective, that is only 3% less than where it was during the great financial crisis. Right now today, 11% of these good people have not made their mortgage payment. They are in default and they are going to be forced to sell. And hopefully some will be smart enough and take action and cash in on the massive shit ton of equity that they think that they have. And I hope they're right. Some will face short sale. Some will face foreclosure. Some will face bankruptcy, divorce, and much, much worse. Because anyone burying their head in the sand, pretending that it will go away, is in big trouble because it doesn't go away. It only gets worse if you don't take action now. And right now, 4% of all VA loans are in default. Right now, 2.6% of conventional loans are in default. According to the Mortgage Bankers Association, MBA, 3.88% of all loans outstanding are behind on their mortgage payments, which is defined as being 90 days or more delinquent. 90 days or more past due. And yet, there doesn't seem to be a big uptick in distressed sales yet. I wonder why that is. Not to worry, we're going to cover it. And let's not forget that it only took 10% of the overall national market to be in distress, to be a distressed sale, to rock the market nationally, 30% downward. And it was much worse in some markets. There were fire sales everywhere. But right now today, not so much. And I read your comments. Some folks think that because they've got a 3% mortgage, they will never have to sell. And maybe they won't. Their interest payment, their monthly mortgage payment is so affordable that they will be able to live comfortably forever, right? I sure do hope so, but apples are $7. And right now today, roughly 3.3 million homeowners are in default. And pre-foreclosures are skyrocketing, well past pre-pandemic levels. Meanwhile, property taxes are up nationally, roughly 24% from 2019 to 2023. Property insurance is up 19% during that same period. But in Florida, it's much worse. Assessments, insurance, HOA and condo fees, groceries, childcare, health insurance, the skyrocketing cost of living list goes on and on. And yet, the people who are buying $7 apples are continuing to buy homes here in Florida. And I did a full in-depth analysis of home sales in each and every zip code within Palm Beach County during the first quarter of 2024, which you can watch here. And yes, I suspect you're going to be blown away by some of the massive appreciation that has happened year over year in some markets. You're also going to be equally surprised by some of the depreciation that has happened year over year. But there's clear-cut evidence, because the numbers don't lie, people do. The numbers show that there's a reverse market crash happening in some markets. And there's the start of a fire sale in others. But you can check it out for yourself, and I digress. I got a phone call from a friend this past week, and she's going through some serious issues. And I know everybody's got their own issues, but she unexpectedly lost her job. Really nice lady, really nice family, really nice home, really nice mortgage interest rate, really nice neighborhood, really nice school district, really nice life, sitting on a metric shit ton of equity in their home because they bought it when it was much lower. But completely unexpectedly, out of the blue, did not believe it was possible, is suffering a $250,000 income loss immediately. And her plan was to side hustle her way into filling the gap of that income loss by taking on as many jobs as possible. But with 3 little kids at home, that side hustle pipe dream is not possible. And 3 or 4 job side hustles does not make up, not even close, to $250,000 worth of income loss, especially when they're already buried in credit card debt and apples cost $7. They are facing the economic reality that they're going to be forced to sell either on their terms while they still can, or with an economic gun to their head, which is very unlikely to produce the best terms. And while they don't want any of this, they are forced to deal with the reality that they are going to have to sell. And they are not alone. Consumer debt is at all-time highs. Consumer savings is at all-time lows. And 50% of every dollar ever created in the history of money printing was printed in the last 4 years, which is highly inflationary. The dollar is not worth as much as it was a few years ago. Simply put, the dollar isn't worth much. So if the $500,000 home that you were looking at in 2020 is now trading at $1 million, did the home double in price, or did your dollar get cut in half? Is the glass empty or is it half full? I don't know, but I do know that 93% of people who bought a home since 2022 have buyer's remorse. And exactly how hard do you think these folks are gonna fight to stay in their home when apples cost $7 freaking? Yet the government adds $1 trillion worth of new debt to our balance sheet every 100 days. Which leads me to the question, where are the foreclosures? Where are the short sales? Where is the distress in this market? Is it hiding in plain sight? Why aren't these distressed sales hitting the market, correcting the market, and driving prices downward? Where is the correction? Sold to private equity. The non-performing loans are sliced and diced up to the highest bidder. The distress is not being allowed to hit the market. And this is not unique to mortgages. The same thing is happening in the auto repo market. The banks aren't realizing those losses for the same reasons. None of this is going to be allowed to happen during an election year or an election cycle, or perhaps ever up until it does. And the road to hell is paved with good intentions. And the path to market sanity is not going to be pretty. In fact, it's grim and predictable. Path number 1 is massive correction. And path number 2, the easier, softer way, is likely going to be digital currency, which I suspect is the road to civil war. But what do I know? I'm just some guy who makes YouTube videos eating a lemon, pretending it's a $7 apple. Oh, it's terrible.